Thank you, Minister, for being with us.
Thank you. Thank you for having me.
We had in Mexico a tragedy last week. Of course, on the financial side, Mexico had issued just recently, a few weeks ago, a bond, a catastrophic bond. What are the factors that may trigger for Mexico to get some cash from this bond after this earthquake?
There's basically just a couple, and this is something that we have been issuing for the last almost 6 years now. Basically, it's the magnitude and the location. But given that now magnitude and location actually trigger and have financial consequences, within the contract there's a 30-day period so that we can review jointly with the market, with the issuer, with the World Bank, whether both location and magnitude actually trigger the result of the bond, which would be a payment to Mexico.
You mean the location of the epicenter?
Of the earthquake, yes, of the epicenter of the earthquake.
So the preliminary information is the magnitude 8.1.
That would be covered.
That will be under coverage?
And the epicenter within our territory, that would be covered as well.
But so typically,
yes, we are. We are typically, when you call out both the epicenter and the magnitude, it's important for historical reasons, for record keeping, but now that it actually has an impact on a financial transaction, one needs to look at the numbers more carefully, and that's why we put in the contract that they would have, the market would have a 30-day review so as to ascertain whether or not the data is accurately and the trigger is therefore met. This would be the second time that we used it, at least. We used it under Patricia, where the scale of the meteor, the hurricane, also triggered the catastrophic bond. And the catastrophic bond complements well our architecture in terms of dealing with disasters in Mexico, because it adds an element to what we already have in terms of insurance, in terms of excess loss, and in terms of what we budget every year to face these disasters. So from a financial perspective, Mexico is well set, and we're actually at the border in terms of how we manage our risk disaster contingencies.
Another risk that attacks you every year, Mexico's government finances, is the oil price. You do one of the biggest commodity hedges in the planet. Are you almost done with doing the program for 2018, and what kind of characteristics can you share?
Well, there's 3 elements to that, which is a buffer in our economic package. First, there's the fact that more and more we use market information so as to set the level that we put forth to Congress. So that in and of itself provides a certain level of certainty.
And it's going to be 46 according to your
46, which is roughly where the futures would have the price of oil on average being last year. So that gives us an element of certitude. There's a second element that's relatively recent. We've established a stability fund within the budget so that allows us to have a fund that's there in case there's a shortfall in our budgetary income, be it because of taxes or because of oil. That has about 180 billion pesos in there. So that's a good amount to have, and that allows us more flexibility when we access the market in terms of the prices that we're looking at, so that the combination of the two, what we have in the fund and what we cover in the market, actually provides support to the price that we set in the budget. We're in the process of finishing the coverage program. As always, we'll give full details and full disclosure once we're done. But at this stage, we're pretty confident that the combination of the stabilization fund plus the coverage gives good and adequate support for the $46 that we put there in the budget.
Would you say you're 90% completed of that program, 80%, 95%?
No, we wouldn't. As you said, it's a large program. So what we do every year is once we're completely done, we give the full details. But we're far enough advanced so that we're confident in saying that the $46 coverage and stabilization fund have ample and good support.
Just comparing to previous years, one thing that is different for Mexico now is that the gasoline prices are semi-liberalized. Did that imply that you have to increase a little bit the volume, that you have to protect your risk?
There's that element to it, and that played a role in terms of looking at how much we would cover. But there's an additional element, both because the platform is smaller and the price is also significantly lower to what we saw in the past. The degree to which our public finances rely on oil revenues is now much decreased. So our sensitivity to changes in the price of oil, as the impact that it would have on our public finances has been reduced. So it's largely to be marginally higher in terms of the fact that we don't have the natural coverage that we used to have, because now our energy balance is pretty much in tune. We almost export as much as we import. We export oil and we import gasolines. But it's also true that the margin to which our public finances are exposed to changes in the price of oil has been dramatically reduced as well. Just in 2012, about 36 to 37% of our revenues were oil related. That number went down to 16.
So with those factors, it will be right to assume that the cost was a little bit lower than previous year, giving me the...
Roughly the similar amount.
Okay.
But again, we'll have full details as it is done. And at this stage, I think from the perspective of the debate on our budget, 46 seems reasonable, both because we are able to cover it well between market and stabilization fund, and because it's very much in tune with what the market expects in terms of the information that we get from futures market.